Welcome back to GoldSeek TV. I'm Vanessa Collette, and I'm pleased to be joined by Chris Mayer. He is an author and editor of Mayer's 100X Club. It's great to see you, Chris.
Thanks for having me on, Vanessa.
Now, Chris, you're a proponent of buying and holding stocks. Why is that your strategy as opposed to being in and out of the market more frequently?
Well, I say there's a lot of reasons. One is that that's kind of the philosophy of Warren Buffett and a lot of great investors, is Peter Lynch, and a lot of the guys I studied when I was learning how to invest, that's how they do it. And it fits my temperament well. So a lot of this is, what you do well. And some people can trade in and out of the market. I'm not good at that.
Right.
So what I'm good at is finding companies that you want to buy and sit on and hold on to and not get so caught up in the day-to-day movements of the market.
Absolutely. Well, there's, faster trends and long-term trends, and
yeah.
Clearly in the end, the long-term trend probably makes more sense to observe. Are there any kinds of stocks that this strategy doesn't apply to as much?
Yeah, I mean, there's a lot of, to buy and hold a stock, it's got to be a pretty good business. So there's a lot of stocks out there that are lousy businesses where time is not your friend. There's stocks that are inherently very speculative. So some of these little biotech stocks are probably not something you want to buy and hold forever. So that's really how it divides.
Now, you've said a part of your hold strategy is not paying attention to daily news. Does that still hold, and when are things so potentially volatile?
Yeah, I mean, a lot of times the daily news focuses on things that have already happened, and they focus on things that are in the news but don't really matter so much long term. So, I mean, for example, I've been coming to Vancouver for financial conferences for 11 years, and every year there's always a reason not to buy stocks, right? There's always something people are worried about.
Right.
But over the long term, what really matters is, how good is that business, and what kind of return does it generate for its investors? And a lot of times, if you get the business right, the macro stuff doesn't matter. So one example that I'll use tomorrow is Coca-Cola, which went public in 1919.
Right.
And it was cut in half. So in 1920, it was trading for $19. And if you went back, an investor in time, and I told you what you had to look forward to, you have depression, you've got wars, you've got sugar rations, all kinds of bad stuff. Would have scared you out of it. But if you just held on, that $40 investment could turn into $5 million today. So
I know that's one of Buffett's favorites, and he's done really well with that over the years.
Yeah, he's done well over time, not so well last 10 years. But
right. So you consider yourself a fundamental investor at heart, and in that.
Yeah, I love to dig into the companies. I love to visit with them, check out what's going on, really understand it, what makes it go. And it's not that any of those big picture things are unimportant. I mean, a lot of times, the news is what drives stock prices short term. But it's more a mentality of taking advantage of those prices rather than letting those prices dictate what you're going to do.
Now, what kind of stocks would you say would be good to look at in this kind of deflationary trend?
Yeah, this is a resource conference, so I have resource investments on my mind, and I like things in agriculture.
Okay.
So a lot of those stocks, they've got great long-term trends, have to do with tied towards growing populations, and also shifting diets. So people eat more meat, that puts different stresses on the market. And so there's very interesting ideas of companies doing innovative things with seeds to produce more crops using fewer resources. That's a big issue. There's changing the dietary composition of a lot of these things. So like lentils and chickpeas, trends, all the buzzwords, right? Non-GMO, non-allergenic,
gluten-free.
Yeah, gluten-free. So.
Well, I saw wheat just hit a critical, I don't know if it was an 11-year low or, but commodities are down across the board. So, is agriculture the only sector you're looking at, or there's some others?
Yeah, I mean, I'm invested in energy. I like some of those names. I have a position in Park Petroleum, which is a refinery. It's one of Sam Zell's vehicles. Has a lot of net operating losses to shield itself profits from taxes, and they own the largest refinery in Hawaii. So as the price of oil has fallen, they're going to make a lot of money. Because as you know, with refineries, the price of oil is an input for them. and gasoline prices don't ever seem to fall
Right.
as much as oil, right? So they make a lot of money.
Interesting.
That looking at energy, the miners are cheap. I don't have any position in the miners now, but I am looking at and I'm interested in some of the streamers. So things like Silver Wheaton, who the CEO was here speaking yesterday, has a really good model, and one that can do well in a variety of environments, even in the deflationary environment.
Absolutely.
Or Royal Gold, those kind of royalty companies are good models.
Now, you've mentioned some concerns that you have for the stability of our global economy. What are some of the things you're most concerned about?
Well, China is a big question mark. It's a big market, and what goes on in China is going to affect the rest of the world. They're the number one user on the margin of a number of commodities, and so if they go south, so does the demand for a lot of these commodities, which we've seen, right?
Right.
I think what's going on in Europe is also something I'm keeping an eye on. And actually, I think in Europe, that creates some interesting opportunities, because there are some interesting companies that are cheap, but have a global presence and sell to all different kind of markets. And then the U.S. market, it's just that it's run so strong for so long. We haven't really had a genuine correction since, I think, 2011. So there's always a concern that we're going to have a sudden downdraft here. So you want to keep some dry powder for when that happens.
So you're staying somewhat in cash for that?
Yeah, I mean, I don't try to time the market per se, but it's harder and harder to find bargains. And so when I can't find really good bargains, the default position for me is cash. And so, yeah.
Well, thank you so much for joining us today, Chris. It was a pleasure having you on.
Thank you for having me on, yeah. Sure.